And we are live. So we're here today with a special guest, Uda from Friktion. We're having a little bit of camera problems, but it should be able to come back on right when we get into it. There we go.
Awesome. Hey,
Amazing
man.
to have you on, man.
Yeah, glad to be here. Really excited to talk to you guys again. I think the last time we chatted was a couple months ago, right when we were launching to mainnet. And here we are, almost $1 billion in cumulative volume and 100 million TVL and chugging along, trying to ship new products. So really glad to be here.
Dude, yeah, it's been amazing just in general seeing all these Solana ecosystem events. I know you guys were doing a panel at South by earlier, so we're here in Texas. And it's just really great to get this meetup in person, really hear about what's going on Friktion. I mean, you guys have came a massive way since we've last spoken. I think we were talking about it a little bit. You guys are the largest, if not one of the largest options structured product platforms on Solana. So
yeah, really, it's been a fun 2.5 months almost. Launched on mainnet the middle of December, and since then, we're the largest options and structured products protocol in Solana, and really excited to be building in this space.
Yeah, dude. So we'll just jump right into it. I know you guys have a lot of updates. We're going to get into a preview. Not too sure where you want to start. If it's something
I'd love to share an update on what happened with our Lightning OGs. So for those that aren't familiar with Friktion's NFT program, we essentially had this commemorative NFT called the Lightning OG that was given to Friktion's earliest power users, meaning they were the ones on DevNet filling out forms, providing feedback, and using the protocol when there was really no economic incentive. And those users were rewarded with our Lightning OGs, which are also available in the secondary markets on Magic Eden. And we've been building a program so that they can have access to early access to the newest vaults, the newest exchanges we're working with, and just generally getting an inside scoop and chance to talk to the team on a really frequent basis. So I encourage everyone to check out the Lightning OG collection that Friktion recently dropped and participate in our Discord conversations about it.
Yeah, I think that's awesome how you guys set that up for DevNet users and really give a way for community to exercise a voice and be active. So it sounds like there's a lot of alpha going on in these chats. If you guys are checking out Friktion, definitely something to look into there. So that's massive. I know there's a couple other things. I'm going to shift us. I think something that was big because we did talk about it on the last podcast was actually diving into potential treasury for DAOs. And now that's live with Realms. So we can.
Dude, really excited to bring Realms integration to Friktion and Friktion to Realms. For those folks who aren't familiar, Realms is SPL governance program that was written by Sebastian Bohr and a lot of the Mango team. And it now essentially is the architecture for any DAO that wants to build on Solana. What we just did was we shipped a feature by which any DAO on Solana using Realms can participate in the Friktion strategies or vaults using their DAO treasury. And this can be done in a very decentralized, permissionless way from a multi-sig, if you have a DAO that's set up as a multi-sig or a bespoke DAO. And now these DAOs can use Friktion strategies to manage their treasuries. This is the first big integration after Mango Markets into Realms, and we're really excited to kind of bring this to DAOs. And alongside this, we're building out part of the Friktion program or protocol. We call it Circuits. I'm just sharing my screen here. Circuits is essentially on-demand portfolio management built for DAOs. We do really recognize, and part of the reason we wanted to build in the space in the first place was risk management in DeFi and broadly in crypto was kind of really unaddressed. And there wasn't an opportunity for DAOs to build things that could last across multiple bear markets or multiple market cycles. So we really introduced Circuits as the way by which a DAO can create a very specific risk-reward strategy. And essentially how the process works is a DAO that participates in Circuits participates through kind of a couple of means. Once your treasury is inside the protocol, we do a couple of things. We start with risk analysis, which determines the historical performance of the portfolio that you currently are applying or using. And then we design a risk framework based on your risk tolerances on a monthly or an annual level, the return targets that you're looking to achieve, the maximum drawdown you're looking to wear, as well as the volatility and liquidity that your DAO may have given certain working capital needs. Now, once we do this, we construct some strategy baskets as part of the portfolio design. We do some stress testing across kind of various market scenarios to see how the portfolio would perform. And then we really implement this by shipping custom vaults. Again, vaults are Friktion's native structure products. So we design a vault around the risk parameters you have to target your, whether it's a sharp ratio or whether it's a drawdown condition that you're preparing for. And then we help you allocate accordingly to into these strategies and kind of build protection against adverse events in the market too. So really excited for our first circuit, the Genesis circuit. We'll be announcing the DAOs that are participating in the next week or two, and really looking forward to kind of bringing that DeFi risk management to Solana.
That's sick. I think something that I picked up there that I didn't necessarily realize is how tailored you guys are looking to get to fit needs. Obviously, a DAO can probably go in and utilize any of the vaults that you guys have, but actually looking what a DAO, how they want to manage risk, what upside they're looking for, especially I think times like this were a massive wake-up call for projects who maybe didn't have their treasury outlined in a more like stable way in a lot of souls. So I think this was a massive wake-up call. Excited to see who gets announced in that lineup. There's definitely demand, especially I think just wrapping up a lot of this, like a lot of DAO tooling has been coming. And this is just something massive where now, as you're saying, DAOs can spin up a multi-sig, be able to vote on getting into a vault and able to do that. It also sounds like you guys are doing circuits. Are those simultaneous or?
Yeah, good question. So on a higher level, how do circuits and vaults interact? So vaults are specific strategies. Right now we have 2 vaults that are open for kind of all public users. And then circuits can allocate between existing vaults as well as create new vaults. The process of creating new vaults is kind of similar to how Yearn's strategists or tokenomics liquidity directors work. They spin up something that is optimized for kind of a target risk profile. And then that sits alongside the allocation of a DAO amongst their portfolio and other things. So we work with protocols like Tulip or previously SolFarm to utilize their yield-bearing stablecoin, which essentially aggregates yields from lending across the entire Solana ecosystem in money markets. And we can use that. We can have that earning yield on the side if the protocol is sitting in stables and the risk appetite isn't large enough to look for a more of an options-based strategy or a basis, which is perp versus spot type strategy. And yeah, I think a big thing for us is just really being clear about this and how we're going to work with DAOs, and really excited to build more strategies beyond the kind of ones that come out of the box with Friktion.
Yeah, that's definitely super sick. And I know I'm repeating myself, but it's just a massive move. We were touching on this a little bit before, the fact that as DAOs, they need these tools more and more, and things like this make it easier for DAOs, which attracts more talent into the Solana ecosystem, which is something that is somewhat lacking. But seeing things like squads, realms, Grape, like there's a lot of people who are looking to build these tools, and also a lot of projects that are also looking to utilize them. So I think that's,
dude, we're so hyped about this. I mean, I'm just sharing my screen with the Realms page. If you don't have a DAO, or if you're not familiar with some of the DAOs using it, definitely check out Realms. I mean, you have some of the largest DAOs like Mango and Serum and Metaplex kind of building out their infrastructure on here. And I think this really brings Solana to a next level, since no one has really put a ton of, from the DeFi side, put a lot of resources. Of course, the core Mango team has done a lot of work, but bringing DeFi to DAOs is something that I think Solana has a chance to really stand out from kind of other L1s in terms of the community, and really looking forward to shipping more vaults for them.
Yeah, that's sick, dude. And I think this is a good transition into just how has the success been at Friktion? What is the utilization? How has that all been? I know we've been covering some analytics, and I think this is a good segue just because the DAOs will leverage this even more. But you guys have already been off to the races as for sure having liquidity and volume.
Yeah, we've spent a ton of time, and we love the numbers. So I'm just sharing the screen here with kind of some of the stats that we've been collecting and some of the data we've been aggregating, because I think the biggest thing about structured products is the need to be transparent and for people to be able to understand the risks. So this is our analytics dashboard that we launched a couple weeks ago, which really goes into the weeds of every vault. Again, vaults are just the specific structured products. The total assets deposited. We've generated about 4 million of premiums for the users so far across 150 auctions, and now we support 23 different products, recently adding Step Finance's native token Step. The way anyone can interact with this is you just click on the vault that you're participating in to get an idea of what's the profile of what's going on. You can check out your share token price or your vault token price, which represents the price of the token that you own inside the pool. So kind of similar to an LP token in that sense. You can also visualize the price of Bitcoin in this case, or BTC, versus the strike prices selected during the epochs. And then there's a ton of what we like to think is institutional grade material about each one of these strategies, going both into the yields, the fees, the risks, as well as just kind of how does this work on the Solana network. And really users can explore anything they want to about the strategy. So really excited to bring this. And I think this is something, like you said, will really encourage DAOs to participate in DeFi as well, if we can kind of move the standard for risk transparency and performance up. One thing that we're really excited about too is a My Portfolio page, which is not live yet, but once it comes live, any user, DAO, individual will be able to track their performance on Friktion using kind of the DApp and be able to really manage their portfolio in a more sophisticated way, which is something we're looking forward to working with Step Finance for. So
that's awesome. Yeah, we're also chatting on that a little bit. I was at Mountain DAO previously, got to meet with the Step guys. So
yeah,
sick to see how the ecosystem works together. There's a couple different places I want to go here. I think a good point now would just be to take a step back. We jumped right into it. I'm curious if you want to just outline, I mean, this is the thing you probably have to do every time you jump on something, but outline just
of course, yeah.
covered calls and cash secured puts, I believe. Not more so like fundamentally what they are, but some of the outcomes I think help a lot of users to just figure out when they perform well, maybe when they don't perform so well.
Yeah.
All of that.
Great question. So the way I like to look at it at a high level, we have two strategies, as you mentioned. We have the call override program, and then the put override. So essentially selling a fully collateralized call or put option against some assets that you own. In the case of the covered call strategy, tends to work better in kind of mild bear markets, by which implied vol on the upside may be going up, and you can kind of sell. You can sell vol into that. So you can essentially, while the price of your native token, let's say you own SOL and the price of SOL has been falling, if you deposit into the SOL covered call, for example, you're still collecting some premium while the price of SOL may be falling down. So it serves as a really effective income generation strategy when volatility is at the right levels. And then on the other side, the cash secured put program, you deposit stables, but you can choose which asset you're selling the puts on with those stables. So right now our most popular one is SOL on the put side. Very similar, except it's a little bit more bullish of a strategy. One mechanism that we're thinking about adding in soon is actually a physically settled option in which the user can take delivery of the underlying asset if it's exercised. So this means if we're selling a put option that's 25% out of the money and SOL falls, let's say 30% by the end of the epoch, the user can own SOL at that strike price and still collect the premium. So now they're long SOL and they've given up their kind of option there. So that's another really interesting one. More excitingly for us, though, is the next two vaults that are coming out. I'm happy to kind of dive into how those will look as we're starting to leak some alpha there. The next vault is focused on harvesting volatility yield. The way we look at this is it utilizes this really cool a mechanism that's designed in DeFi called the Power Perpetual. Essentially, instead of the normal perp, which tracks just the price of an index, so it can be any time series of an asset. Let's take SOL, for example. This tracks the price of that asset to some power. So let's say we start with SOL squared. It tracks the price of SOL squared, which gives us very interesting convex payoff that kind of resembles an option. So we have a strategy that kind of monetizes this and really makes money in these kind of flat markets in which maybe SOL is stuck in between a range for a long time. The strategy, also known as a crab strategy, should perform really well. And then the fourth vault, which should be coming out shortly thereafter, is an impermanent loss hedging strategy for all the degen yield farmers on Solana. You can protect against impermanent loss on your console product AMMs by depositing your LP token into the vault, and the vault will accordingly hedge the IL for you and let you know what the net payoff would be.
That's sick. And I think this is something we've talked about earlier on, right? We've seen across DOV structured products, these covered calls and cash secured puts are kind of the norm. A lot of people are doing them, but it's always been the discussion of being able to offer more products, things that work in a crab market, faced more towards volatility. I think the impermanent loss hedge is massive, considering that most people that are in DeFi that are on the retail end are in liquidity pools, but you don't necessarily have easy tools to go hedge. Like if you ask me right now how I would go hedge impermanent loss, I wouldn't have a good answer off the top of my head. So being able to provide these tools for strategies, I think is really exciting.
It's going to be a lot of fun. I mean, we're building Friktion for individuals, like you mentioned, retail users, for DAOs, for more like safeguarded treasury management, and also for institutions. And I think there's demand from all three of these parties for hedging tools, for just derivatives. And we've seen the DeFi market for derivatives really explode in the last year. Friktion included, I think we're almost at $1 billion in cumulative volume for options, which are fully collateralized and not it's just growing so fast that we're starting to see comparisons against centralized exchanges like Deribit or Direct or Bit.com. And really looking forward to how the options space grows on chain.
Yeah, that's sick. And staying on that a little bit more, we're mainly seeing a lot of these options growing on Solana. How has it been just in general? Where do you see the market going with how many people that are in the space building things like options and derivatives? It seems like a lot of building has been going on for, say, the past year, 6 months or so, and it's really starting to show now. But as crypto continues to mature, especially Solana, we see the tooling, we see more volume, more liquidity come in. How do you see this continuing to proliferate?
Really good question. I think one of the answers is really about how efficient we can be with our collateral and essentially how capital efficient will these strategies eventually end up being, and how will they balance leverage and return. I think one big thing about options in DeFi, or generally options on chain, it has been this criticism that the margining isn't available as it is in a centralized venue, let's say FTX, where you can margin your perps against your spot, or Deribit, where you can margin everything against everything else functionally, whether it's portfolio or risk-based margining. So one big thing that we're looking forward to is kind of the construction with MarginFi and other kind of generalized leverage protocols by which we can now, users can use their F tokens or Friktion tokens as collateral for other trading opportunities, which really unlocks this like level of capital efficiency that really competes with TradFi to a much better level. So I think this is going to be the next thing that unlocks on-chain options. That said, we're also not only long-term bullish options as Friktion as a protocol. We really want to think about what are some new like inventive things that we can do. For example, power perpetuals, which allow anyone to take option-like exposure through an instrument that just doesn't exist in TradFi and really has like a much nicer payoff for people looking to put on some type of risk with a decent amount of managed leverage.
Yeah, I think there's two really cool avenues here. There's obviously this race to catch up and offer all the services and products that are in TradeFi. Like, that's a massive one, right? What MarginFi is looking to do with cross portfolio managing, like composing on top of on all the different protocols. Like, that's something that is obviously missing a ton. But then you also have this other avenue where there's things like power perpetuals that are building, and then even things like structured products. They are seen in TradFi, but these have their own little novel ins and outs that are a little bit different. So it's cool to see this like race to catch up and offer services that are in TradFi. Obviously, close this gap, but then continue innovating.
Yeah, we got to move faster. I think like the big part of DeFi is that the design space is so large that it's just kind of up to us, like how fast we can ship these things and get new products out that are just rivaling the experience. Because our goal, I think, as builders in the DeFi space is to move over users from the traditional financial rails and kind of unlock some of the benefits of being fully on chain, which is something we were talking about during the South by panel earlier. It's like, why does a user at the end of the day want to interact with DeFi if the same alternative exists in TradFi? And at the end of the day, I think one source may be yield, which could come from some on-chain risk premium, but it also has to be from products that just can't exist in TradFi. And perps are a great example of this and pretty innovative stuff that I think multiple teams on Solana are working on.
Yeah, that's great. I'm getting down to the bottom of my questions here. I think this was great to just get an update here. We didn't dive too far into like the very basic things that we talked about the first time around. Why Solana, really the beginnings of Friktion. You can all find that there. We've done a stream in the past, Uav and I, so you can definitely check that out there. And I think there's a couple things. I know you mentioned that you guys are working on expansion, so we can just touch on that a little bit and talk about what you guys are doing in that regard.
Yeah, would love to. So currently we're a team of about 6 people. We all come from trading, quantitative trading and research and engineering backgrounds, and we're really looking to grow our team. So if anyone's interested in joining us, whether it's in a front-end role or DeFi DGen or someone who wants to work more closely with DAOs for risk management, always looking for great people to help us build the team. So do shoot us an email at team@friktionlabs.com or hop in our Discord. It's discord.gg/friction with a K. And we're happy to chat with people. We're growing the team a ton. So see you guys there.
Yeah, I think that's super sick. And to cap it off, we can do a little double-ended question here. What is something mid to long term that you're really excited to see come out of Friktion, whether it's infrastructure or just where you want to be mid to long term, give it a year to 5 years, and then also take that and just what you think would be awesome to see where Solana is in that time period. Like, how do you guys look to grow together with the ecosystem, and what does that look like in an
really good question.
ideal world?
Yeah, I think, I mean, one big thing for us was just like, how could we bring the type of tooling to Solana for DAOs that we'd seen exist and we'd used on Ethereum for a while. So a big one is really allowing DAOs to be as mature on Solana as they are on other chains. I think we're really trying to contribute to the ecosystem in terms of that. Another bigger, longer term vision for us is how can we make Friktion really useful for institutions as well? There's this kind of meme of a DeFi mullet. If you've heard of it, just essentially means like some fintech app on the front with the DeFi source of yields on the back. And one thing we're looking to expand as well is how can we get into some of these apps that are essentially offering yield package products to their users who currently have a lot of traditional off-chain users and bring types of Friktion type products to them, whether it's even more customized vaults or strategies that are unique just for their users. How can we connect these two spaces and bring in the next kind of 100 million users into DeFi and Solana as we scale?
Yeah, I think I'm going to open up a little bit more there. I'm just curious, obviously the liquidity that can come over from institutions like this whole thing of bringing people over from TradFi, building out the rails. What are some of the biggest things that it seems like are missing in that regard from the institution ends? Like why are there maybe reasons why they don't want to jump in yet? I imagine some of it's obviously just like how nascent it is, regulation, but then also there's rails that are looking to be built as well.
Yeah, a big part of it is figuring out how capital can safely move between various places. So whether it's through a custodial solution like Fireblocks or Anchorage or Copper, or it's through a self-custody program with an institution. Actually, when you look at Friktion as a network right now, on the supply side, there's a group of ton of market makers, whether they're retail or institutional, who are currently providing liquidity on the platform as a taker or as makers. And we're starting to see a lot of interest from diverse set of funds that never really came into DeFi before. And a lot of the reason they're inhibited from kind of onboarding into the platform is just because we lack simple kind of like KYC ML, which some could argue it's not really permission DeFi isn't true DeFi, but I think there's room for an offering like this where it involves bringing on a different set of users. They may not interact with the permissionless side of Friktion, but in order to kind of get to that set of market users, we really think it's important to build out like safe rails, and we want to work with whether it's a custodial partner or whether it's kind of institutional capital allocators, large funds, or family offices. We think there's a ton of room for kind of DeFi to creep into there.
Yeah, I think that is super exciting. I just wanted to ask that for insight as you guys are obviously building and able to hear these things. So that really caps it off for me. I just want to thank you for coming on, Udav. We touched on a handful of things. I think something that got me really excited that I saw, obviously just watching you guys continue to grow, but seeing the integration in Realms, this is something that you guys
so hyped about that
specifically talked about. So super amazing to see that and just what's coming forward, be it the circuits involved with the DAOs, but then also more vaults coming out. You touched on the power perpetuals and then the IL hedge. So I think all of that was super great. Amazing update on here. And yeah, just want to thank you for coming on.
Dude, yeah, really appreciate you having us. Thanks for the time.
Yep, definitely. Appreciate everyone for tuning in.